Hello and welcome to MF Corner. I'm Sonal Bhutra and with me is Vinny Motiwala. This is a show where you get your daily dose of mutual fund, investment strategies and a lot more. Hey Vinny, interesting discussion today and we have a lot lined up on the show for our viewers as well.
Absolutely a lot lined up on the show, but in the first segment, what we're going to be putting the spotlight on is going to be the Flexi Cap funds, right? Look at the growth that they've seen over the last few years. The amount of interest that actually comes in here is very great. Now, to talk to us about all of that, we have Sid Swaminathan, MD and CEO at JioBlackRock Asset Management, to talk to us about all of that. So that's what we'll be discussing. Sid, good afternoon. Thank you so much for joining us in the studios today. It's a pleasure having you here.
Yeah, thank you for having me.
And Sid, let's start by talking about Flexi Caps as a whole, right? As an asset class that comes in the mutual fund category, that's seen an amazing growth. October 2025, when you look at it, Flexi Cap funds overall, they accounted the flows were 8,900 crore approximately. Jan was just 5,600. So that growth has obviously been there. Now, given these sharp inflows in 2025, how should one interpret these flows and how does the allocation in terms of portfolio come in for investors here? How should one be looking at it?
Sure. Look, I think the way I think about this is there's always going to be times where a certain category or a certain sector is the flavor of the month or the flavor of the week. We all know this, right? But what's really encouraging for the Flexi Cap category specifically is that the consistency with which that has grown and the popularity of it with investors. And to me, it really signals that it's being kind of accepted and seen as the core equity allocation for everyone's portfolios, right? So, and that once you kind of have that mindset to say, okay, and I'm a big believer in asset allocation, so I'll talk about that a lot. But once you have an asset allocation in mind and you say, I need a certain percent in equities, and then within that, you have Flexi Cap as your core, and then you can choose the, let's call it the satellite allocations around that. That's a really powerful way to kind of build your portfolio, increase your wealth. So I think Flexi Cap being at the heart of that is a really positive sign for all of us.
So when you say it should be a part of the core portfolio, of course, asset allocation can mean different things for different people. It's personal finance at the end of the day, so it's very personal. When you talk about it, say somebody's starting out fresh, they're first-time investors, and we're seeing that continue month by month in the mutual fund industry. How much do you think they should allocate to say, Flexi Cap funds? Of course, it wouldn't be one answer fits all approach, but what is the general answer on how much Flexi Cap should be as a part of your portfolio?
Yeah, it's a really good question, and we're very excited about the first-time investors. If I can take a minute, so we have so far in our 4.5 months since launch, gotten about just over 8.5 lakh investors. Of those, nearly 10% of those are first-time investors. So we're very, very close to them. And the beauty of, to answer your first question around the how to get started, is that you can get started with as low as 500 rupees in an SIP. So I think that's a great kind of mechanism for someone who's, let's say, not sure, to start just getting into it, see how the funds are doing, to learn more if they want to be kind of learning themselves, or they can seek kind of the guidance of an advisor to get more sort of notification around how to rebalance things. But I think that is a huge kind of enabler to be able to get in at such a small amount. Allocation, to your point, which I've talked a bit about, is a very personal thing, right? So depending on who the individual is, how old they are, what their goals are in life, that can differ a lot. So again, it comes back to the education. Either learn by yourselves, figure out how you want to do it, and then think about something like a Flexi Cap as a core part of the equity, or go and get some advice from someone who can help you build your asset allocation.
It should be core, is the point, not a satellite part of the portfolio.
Correct.
Flexi Cap for that matter.
Exactly right.
Normally when I started, it used to be like, oh, invest in large cap, that is where the safety net comes in. Obviously, Flexi Cap does give the mix of all caps, and someone professional is managing it, so I don't have to keep worrying about it. In terms of returns also, over the past 5 years, Flexi Cap, around 18-20%, while mid and small cap, where that excitement comes in, that's seen a bit of a higher return. So how does one actually adjust their portfolio? Do you need to do that? Or how do you move about with the mid and small cap and the Flexi Cap coming into your portfolio? And core means then avoiding or lesser large caps, or how does that work?
Yeah, sure. I'll try and answer that. So you're right. back in our, let's say, early days of investing, you would just think about large cap as kind of the core allocation. I think the one of the beauties of the kind of market and how it has evolved here in India is that the breadth of the market has grown tremendously over the last year. So in terms of the number of new companies that are coming to the market, getting listed has grown. And along with the breadth, the depth is also increasing. So more and more investors are looking at these companies and actually thinking about investing in them. And that's why you're seeing some pockets in terms of, small cap doing better, mid cap doing better. But overall breadth and depth is increasing. So that means that when you think about the core, your core can now be beyond just a large cap. And that's why I'm now saying Flexi Cap is what you should be thinking about as the core of equity investing. To your second point around how do you pick between the two, again, there are many ways to skin that cat, right? So within a Flexi Cap fund, you can let the fund manager make that decision for you, right? So again, there's the flexibility to go between the market caps, which is why it's called Flexi Cap. Or you can choose to do it yourself, right? And again, at JioBlackRock, we've got funds, again, that are offering that kind of satellite exposure. So if you want to have one core and have a bit more exposure to small cap, a bit more exposure to mid cap, we have funds for that as well. So individuals can choose whether to kind of do it themselves. It isn't easy. Getting that call right, getting the timing right isn't always easy, but some people would want to do it themselves. Or they can leave it to either a fund manager through a Flexi Cap fund or through an advisor in terms of getting the right asset allocation and then rebalancing it in an appropriate way.
It isn't easy. That's why we have you on the show today to make it easy for our viewers, right? But when we talk about outlook on, say, sectoral rotation and how reallocation can be a part of your overall strategy as well across sector, that impacts long-term alpha as well, right? How does that work in the strategy when it comes to Flexi Caps? How often do managers actively think about making that churn?
Yeah, very interesting question. So. In our actual Flexi Cap fund, we have a very differentiated strategy. So this specific fund that we have in the market right now, we are looking to generate the alpha really through stock selection views. So we're actually taking a lot of views because it's a data-driven strategy. We're using a lot of the technology to do that. So we're looking to generate alpha just by making calls on one stock versus another. So we generally tend to be pretty sector neutral in this particular fund. Now, we are planning in the future to launch more funds where we will be applying the same kind of data-driven approach, but to do sector rotation, because we believe there is alpha to be had in both. So you can generate alpha by selecting between, say, one stock versus another. You can also generate alpha by betting on one sector versus another. But the way we have chosen to kind of approach that is actually separate that in terms of having separate funds that do that. So this one is just focusing on securities.
Okay.
And then we'll be launching funds in the future that will focus more on sector rotation.
Okay, so sorry. So in that case, if we are focusing more on stocks, would that mean higher churn? Because the earlier conversation that we had as well, that indicated maybe because it's AI human managed Flexi Cap scheme for you, right? How does churn change things for investors in that case? Because they would like to understand more on that aspect as well.
Yeah, 100%. So yes, so the fact that it is data-driven means that we are able to capture, and when we say data, we're using data that is, let's say, more traditional, fundamental that you might expect, but also alternative data, which moves faster. So you can get insights faster on some of the stocks. So the turnover or churn is higher, but the way we're able to balance that is two ways, right? So one is the fact that I talked about earlier, that the overall breadth and depth of the market has increased a lot, right? So that already means that the ability to rebalance faster is enhanced in a strategy like this. And secondly, breadth, which means that we also have more stocks, which means that even though we're churning, the actual size of the trade in each individual stock isn't going to be huge. So it's not going to have a huge market impact on a single stock. So we are able to kind of, let's say, control our market impact, even though we have a higher turnover than most funds. And that's because it's enabled by this data-driven strategy and supported by the higher breadth and the depth of stocks that we have here in India right now.
Got it. Absolutely. Let's talk about the fund itself, right? The Flexi Cap fund, around 2,200 crore AUM. So much of it, I think 40% of your AUM is coming from B30 cities. So in terms of the type of investors you're seeing growing now here, and what if someone wants to look to invest here, what is the strategy maybe you would highlight from JioBlackRock's point of view?
Yeah, sure. So starting with your initial point on the investors themselves, right? So you're right. So it's at about 2,200 crores right now. We did close to 1,500 at the NFO. So nearly 50% has come in after the NFO, which is a really encouraging sign for us. And the geographic split is very, very encouraging. So the fact that, as you said, 40% of the AUM came from beyond the top 30 cities is super encouraging, because that's really what we are here to do. We're here to bring more people into the market, convert more savers to investors, access the areas where there isn't that much access right now of mutual funds. So that's a really encouraging stat. It's early days. We're still under 5 months old, so it's early days, but it's a really encouraging stat for us to look at. In terms of the how, again, we have seen the full spectrum of investors taking part in the Flexi Cap fund. So we have nearly 680,000 investors in the fund. And that is all the way from your deep mass retail doing 500 rupee SIPs to also some institutional tickets. So it's really, as I said at the start, an all-weather fund that caters to kind of the entire investing population of India. And the fact that you can get started as low as 500 and do it consistently through the SIPs is a great enabler for investors here in India.
You have launched a Flexi Cap funds. July was a season of liquid funds coming in from JioBlackRock, right? What is in the line or the pipeline right now? You have received some approvals. It is in the pipeline as well. If you can just, I wouldn't, of course, ask you greater details on that. That is not something I can talk about. But what are some products you think are needed in the market and will be given by JioBlackRock?
Yeah, absolutely. I won't get into any of the product details here right now, but yes, we have gotten approvals for 4 more funds, which we'll be looking to launch over the next few months. But taking a step back, the kinds of products that we want to bring to the market here, and we have, a couple of lenses that we apply to it. First, that the product has to, deliver a value proposition for a certain segment of the investing population. So whether it's institutional focused products, for example, our liquid funds that we first launched, or more of the retail product, for example, the Flexi Cap that we launched more recently. So it has to have a value prop as a fund for a particular segment. So that's really important. And then when we come to the fund, we look at what's already available and make sure that we are delivering something that's unique and differentiated. Now, we recognize that the market as it is in a growth phase. We've come a long way in the last 5 years, but I still think we're only scratching the surface. I think in the next 5 years we could double from here. So the growth potential is there, but there are almost 50 other AMCs here with funds in each of these categories. So we look at the category, we say, what is it can we bring that is differentiated from an investment style perspective, from an access perspective, from a cost perspective, that really can stand out and deliver something different to the client. So that's the lens that we're applying. And that's the theme that you will see kind of coming out over the next sort of 3 to 6 months as well.
That's going to be interesting, right, to watch for all of them in terms of the themes as well, including different kinds of funds that you all are launching from what you all already have. So thank you so much, Sid, firstly for joining us on the show, giving us an explanation in terms of Flexi Cap Fund, the industry-wise, what's the growth there, and infos there as well. Thank you so much for joining.
Thank you for having me. Cheers.
And viewers, we're going to step into a very short break. Don't go anywhere. We'll be back with more on the other side.